The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. I have got Rich Posson back on here to talk about what's going on in the economy. We had a big jobs report come out, and I think a lot of the interest rate cuts that we were anticipating here towards the end of the year, Rich, might be tabled for a little bit.
That's correct. They came out with 254,000 new jobs in September. People were expecting much less than that. That is a very hard number to forecast, very volatile, crazy. But so it doesn't surprise me that they're wrong. But at the same time, that was a very good number. Must respect that. Plotting that out over years just shows you, boy, it's just been pounding away at more and more jobs. We just keep going for the past 4 years. It looks really good. And the unemployment came in about 4.1%. I think somebody said that's almost unchanged from a prior month, but on a quarterly basis, it's down. And I wanted to see it down. We're at risk it can pop up over the next few months anyways, but now that the Fed's lowered, I think that helps out. I think we've seen almost the highest of unemployment. I'm not worried about that at all. I think it is easing back. And you combine those two things together, and normally on a single day when we get those two things in the same report, it's like one's going in one direction, one's going the other. This time we got them both in the same direction. So it was a very good report. But what's interesting is it comes on the heels of the September PMIs, which are an indicator, comes out every month. And you can use that for an indication of how the economy is doing in GDP. And at the beginning of the week, we got the manufacturing one, and that's soft. It doesn't look good. It doesn't look like we want to be scared and run for the hills. It hasn't looked good for a couple of years now. It is weird. It's never, in my opinion, has not behaved this way since its entire history, since 1950. My modeling is pretty much throwing it out. It's focused more on the services. And I think what's going on is manufacturing has issues with they're being forced to bring back jobs to the U.S. and they just don't want to make these changes, and they're kind of just stuck in a rut, and they kind of got a bad attitude that's not right. They're a little irrational right now because really when you dig deeper, manufacturing is still going. We're building, we got construction sites throughout the U.S. for future manufacturing. Maybe that scares them a little bit that they're going to have too much manufacturing supply. They probably are concerned how well do they make a buck out of this, because really this whole manufacturing boom coming next few years is all about the labor and the middle class and the poor. They may not care for that. So I think we're doing the right thing at discounting that manufacturing. I don't think it hurts us at all. And I think it will catch up in the next couple of years and look better. The services came out yesterday, and it just jumped. It just spiked right up. It's in good positive territory. It is saying the economy is growing. Well, then we get the latest GDP numbers, and it's saying the economy is doing pretty good. But on top of that, we got some government data that was revising numbers over the past 12 months saying the economy's been better than we thought all along. Okay. So now you come in with this jobs reports, you're just saying gung ho go. And man, the stock market's happy dappy. Exploded. I triggered another buy signal for my subscribers this morning as quickly as I could. And fortunately, I warned ahead of the jobs report. We're setting up for a rebound here unless the Middle East interferes with us. We're setting up for it. We want to be watching for it. And now we got the report. I have to go for it. Now, I am telling subscribers, we got about a 2-3 week window to get by that something might still go wrong and put it back down on us. But I have to stick with my long-term forecast, which was up for next year anyways, and it's looking even better. I've even have higher targets now. I think stock markets actually may even go up into 2027 with very little disruption, when I had said, hey, let's be positive into 2026, and then we'll look for some trouble. We may learn that trouble doesn't even show up to 2027. So it looks pretty good. Looks like we can pop the cork off the champagne bottle here and have a good time. And I've had a very good week myself and my subscribers. And we've had September turned out. I got the final performance numbers here in the modeling, forecasting, as well as my own money and money of others. And very good month. And it's been a very good year. We just got to hang in there with the model and saying, hey, this is a piece of evidence we need. Now, it's great and wonderful, but what about the Federal Reserve? As you pointed out, this is too good of information for the Federal Reserve to say, hey, let's keep pounding those rates lower and lower here. Instead, they can now sit back in their chair, put their feet up on the desk and say, let's see how this data rolls here. Let's not rush it. If the markets and the economy want to roar on, let them roar. But we don't have to now throw more coal into that steam engine. Okay, we can leave it alone and let it ride. I think they're in a sweet spot. Frankly, they don't have to lower rates. People who need more higher rates in their money market funds and their accounts are going to be happy. It won't come down quite as fast, but that should not hurt this economy. It's got its feet. It's a solid bull market here for the economy and the stock market. Now, this then brings us to the Middle East. And that's the problem, that something can go wrong for me here, even though I love this report and I'm willing to jump on it, go with it. This Middle East thing, you just don't know how severe it'll blow up. If those rockets are going to fly and enough of them and they wipe out some pipelines and some pumps in Iran, oil's going higher. And oil went higher this week. It looks really good. It's actually still no different price than over the past 4 or 5 years, really, but it's up. And you can see people picking on people that they're trying to pressure people into buying it. I saw a little cartoon of the husband was super treated well by his wife because he bought oil this week. Okay? And so they're out there trying to make the big deal out of it. But I will say, I think the oil market learned after Kuwait, there's no reason causing a lot of problems and getting super excited off wars and exploding those prices. And then fundamentally, economic-wise, microeconomic-wise, we've got a lot of oil pumping out of this country. If we have to, we can shut the exports down and keep the oil for ourselves. We don't have to raise prices to ourselves as much as maybe other places in the world. The world's even better balanced. We can stomach some of that, but I can visualize, you start blowing things up. It really doesn't matter how much supply you have, okay? What matters is prices go up short term. And they could explode, and then they just erode and fall back. And later we say, why did we do that? But the point is, they're going to shoot first, ask questions later. They're going to do it anyways. That's going to upset the stock market. We're going to knock the stock market down. Then we're going to say, why did we do that? Those are the things we got to deal with that still could make this a bit messy for me. And August, October are the messiest months in the stock market. I used to say October was the worst month. Most people nowadays think it's September, and we survived September. And the people that normally like to bet on the downside, they won by early August, but they haven't done very well since. So I think they're a little nervous of selling this stock market. They should have sold this stock market better than what they did last week into this week, even with the Middle East problem. So you can tell maybe they're a little complacent, making a mistake. But they also have learned their lessons that you don't want to get too excited just because you're going to blow up an oil well. You don't want to, don't think the world's going to immediately fall apart. They've been burned too many times playing those games. And I must say, fortunately for my subscribers, I turned negative and sold the stock market here just before this recent drop. And it worked very well for me because the news came in right after the sell signal. We always love to see that. And it was negative news. Okay, we had issues. We had the port strike, which quickly went away, although it's not permanently fixed. I don't believe. I think it's tentative. And then we have the Middle East. But the Middle East really, it's escalating, getting worse. But at the same time, the stock market's saying, well, I backed off some. I sold a little to be safe. But gee, I really don't want to sell it. That's what it's telling me. Okay, because really the Middle East should not hurt the U.S. economy. We're that strong. We're off in our own little world. We can move on. But again, it depends how many oil wells get blowing up. That, I might be backpedaling on that theory, and I am watching out for that. It is to me the only thing that worries me now is really just the Middle East, and normally it should not. History shows it's never been that big of a deal, even when they went to war. But at the same time, none of us really have the courage to say, well, I'm not selling anything. As soon as it blows up, somebody's going to sell something. And on the stock side. And they may buy more oil, and that oil could soar faster. And economists, one of the big global banks come out and said, well, it could go to $200. And I thought, I've heard that for 5 years, 7 years now. Or all these little skirmishes and wars around the world, and it never takes place. But that doesn't mean it can't occur.
Yeah. On the oil side, though, it just feels like to me that there's so much. So a couple things. One, I think on the oil side, it feels like as in America, we now have an opportunity to step back and say, we don't really care what the world market supply looks like. We can alter that, increase, decrease it. Saudi Arabia wants to, the OPEC nations want to go do their thing. That's great. We can decide not to play in that if we want to, right?
Yeah.
So that leads, when I hear people say, hey, it could go to $200 if we wanted to. That's kind of where it's at. If we want to keep it at $75, we could do that too. Right. It's just,
it looks that way.
You know what I mean? I just watching the oil market over the last 18 months and how it just kind of, just kind of feathers its way through, you know, from 60 to 75 and works its way back down to 65 and goes back up to 77 or 80 or something like that. And then kind of works its way back down. It's kind of found this comfortable $15 range that it just stays in and never really gets outside of it. So, I mean, I think when I hear people say that, I'm like, then why is it not done it then? What's stopping it from doing it?
Yeah. And if Saudi Arabia wanted to, they could say, okay, Iran, we've lost production there, we can crank it up. Russia normally would probably crank it up. They probably won't this time just to cause problems. Right?
Yeah.
But the point is that the world is an interesting situation. We can move oil around faster and better than ever before. Same thing in the grains. You know, we've got more ports. We can move things around so quickly. It does limit how high things can go. It can sometimes limit how low, but it's more like limiting just how high things can go.
Yeah. So I got one question for you. So in August, we had job reports come out, and that job report came out and said, hey, you know what, we probably overestimated the number of jobs that we actually created. And you didn't really see a big whiplash from that. How come you didn't see that in August where, you know, when you held this? And I think that had to play with when the Fed decided to cut a half point. I'm sure that had a lot to do with that. But if you're looking back at that now saying, hey, we were off, I can't remember what the number was. I've heard 500,000 to 800,000 jobs that they were misestimated, right? We throw 254,000 back onto this mix. Now all of a sudden, man, the world's a good. Why is there such a big dichotomy between those two reports?
Yeah, that's a good question. Well, that's the government in terms of trying to keep track of things. They like to keep life interesting.
That's right. Yeah, they do. Why was there not as big of a reaction from that report in August that we see now, the August report versus this report?
It wasn't such a big. I'm thinking of the full drop in August, and it did get rather ugly towards the end, but that was because of Japan carry trade. You're right. It wasn't such a big deal on that. It's quite possible that some of them didn't believe the government has got it right even then, that they went too far the other way.
Right.
In fact, I know of some people that had been thinking of that way, but whether that's the prevalent idea of what they were thinking.
So they had some of it baked in already and kind of in their processes.
Yeah.
Okay.
Yeah.
Right.
But this report, I kind of felt like some of it would have been baked in. But no, I don't think so. I think they really were surprised this morning. Okay. I think even those who are optimistic on that number, and of course I say I'm now even more bullish going to next year and the following year. I'm not saying this thing's going to take off like a rocket. It actually could. There's some other people out there talking this is a melt-up market, but I'm looking at Middle East. I'm looking at the coming election and some of these other things. I'm thinking, not so sure that's a real rocket ship. But I do think with this jobs report, someone could argue, okay, so you added these jobs, but you knocked them back so much further, then the total number of what we're doing long-term, what still isn't as high as what we thought. We lost some ground and we got some back, you know. So that may temper them, how bullish they really want to be down the road. But the point is, I think it's gone long enough since August that people are also saying, let's just treat it face value. It was a good report, you know.
Yep.
So, and by the way, the dollar's up very good too. And it's interesting. The interest rates and the dollar started up a little better than I wanted at first. I've been telling subscribers, October and November, we're going to see higher interest rates. We're going to see a higher dollar, and it's not going to bother our stock market forecasts, except maybe on a short term we could get bigger drops that we're already forecasting anyways. Might get a little something there that surprises, but overall we'll get through it. But the interest rates actually start up a little sooner. And I think the bond market was picking up on this because you could make an argument the bond market should have put interest rates lower right after the Fed than what they did. They didn't do much of anything. And it's almost like they already knew, okay, we got the Fed finally to do this. We've been betting on this for over a year now. We got it. But I think they were already looking at saying, you know what, the Fed may not lower in the future here because we got some better numbers coming down the road here. So the bond market, everybody says it's the smartest of the markets in the past year or so. I've kind of thought, I don't think they're all that clever, really. I must say I'm starting to think they were pretty clever in the last few weeks because they should have really knocked the interest rates down hard after the Fed Reserve cut. They should have tried to stay ahead Fed Reserve. I think some of them said, you know what? nothing's really falling apart. There is no recession here. There may not be a need for the Fed to really hammer this. I also think we had just some normal day-to-day business in the bond market that just required rates to go up and a little speculation, stuff like that. The rates also may actually be playing a bet on the dollar, which is a bit odd to me. I normally assume the dollar is keeping an eye on interest rates more than the bond market's keeping an eye on the dollar. But the dollar actually led interest rates higher. It's the way it looks, and maybe more coincidence. It's going to take us a while to see all the data and all the players here because this just happened in the past few days. And it takes time, even with all the computerization. It's amazing how some stuff's still rather slow to get your hands on. The dollar primarily had additional strength off the Middle East thing as the world said, oh, maybe we'd like to put some money with the safest country. Which one's that? Well, it's always been the U.S. And well, at least for the past 100 years. It used to be England, back in the 1800s. So it's you got some of that where they bought the dollar, and they may just be going into currency trading and not necessarily being invested in the U.S. So we don't want to make too big of a deal of it. But normally when I see things like that, I assume, well, gee, somebody's buying some U.S. assets. They're getting money market. They're getting bonds. And why not stocks, And it's just because they feel like, hey, if the world's going to fall apart, we'd rather have our money with the U.S. than
right.
The U.S. might come down a little slower than everybody else.
Yeah. Nope.
So I'm very convinced there's some of that in the dollar this week, but it doesn't scare me in the sense of, oh, do they know something? Things are getting far, far worse, and we got to all run for safe haven and run run to the U.S. I don't think so. I think it's just a quick little response, shoot first, ask questions later kind of thing. We're seeing quite a bit of that, and that's going to come and go. Hey, we've had Middle East issues, it seems like forever, and they have been going ever since October 7th, right?
Right.
Haven't fixed anything. So to me, I'm a bull, but I don't feel like I'm so bulled up that I'm kind of ignorant, not paying attention. I understand those things. What I'm saying is I think I've found the relationships and measurements that suggest it's not really we shouldn't worry that much. The U.S. has got a better safety net and cushion than much of the other world. And therefore we have some time to make some money and enjoy life a bit when, yes, there's horrific things going on in the rest of the world.
Yeah. Okay. So last question I have for you, take a look at corn. Over the last, especially I think even this week, like we've seen probably, over the last 2 weeks, you've seen almost 30 cents in corn kind of run up. I think you've seen some profit taking days, seen some harvest pressure, those kind of things last couple of days. But you're looking out at where things are at. Your thoughts on corn and what was some of the big driving factors that you've seen in the corn market to push it up so much so fast?
Yeah, I think it's a realization it was simply too low. You got to get it higher if you want it.
Right.
I don't argue. I'm not arguing that we got a lot of corn out there and we got a lot of soybeans, but it just seems like it's not big enough that we have established a storage for it. We always seem to get caught up eventually on storage. We have a farmer who's sweating. Okay. He needs a better price. And we really overdid it this summer, beating prices down. Okay. And once they saw that crop was great, they just sold it all year long. Very, very unusual. You don't see, I really thought we were going to get it in 2013. I said, boy, this is one of those rare, rare years. It's probably just down all year long. But come August, I said, it's going to bounce. I made $2 a bushel, I believe it was, or $1.80, something like that in soybeans. Boy, this year we couldn't even get that. They just kept pounding, and the funds did it way over what they should have done. They got away with it because the commercials really weren't stepping in and trying to load up. Why were the commercials not doing that? They were concerned, where's all these wonderful exports? What's our trade war with China? Where are we going with all this fight inflation and stuff like this? I'm very convinced the Fed lowering rates changed the mind of the commodities sector. I don't think you're going to see the bears spending as much money as they did. They're not going to be as vicious. They're going to be more careful now. If they want to be bearish, they're still going to be bearish because there's so many other factors to look at. But I think they've decided they got to think something different longer term. In my opinion, I think these grains are going higher in the summer. I wouldn't be surprised they're going higher in the 26, 27. But that's a different story out there. They could go higher in the summer next year, get a great harvest, knock it down, put it right back up again in 26 because of weather. And we could have a weather issue next year too. But I think we're getting back to the better seasonal demand that can work prices higher. And you go back and study your charts all the way back to 1866. You can get that USDA data going for you. You can see there were years we had lots of grain. The prices went up anyway in the summer. They just didn't go up huge amounts. Okay. So I'm rather optimistic here where we're going. We can grind our way back. There are always going to be twists and turns. And then I'm watching South America. I'm watching Russia with its dryness.
Oh, yeah. It's so dry. Yeah.
Yeah. And then you've got dryness in certain pockets in South America here. And that's a corn soybean story. Russia is a wheat story. That's why I think all three of these can get some traction, get going here. I was bullish in recent weeks here. I personally took some profits in some of these markets. I still own some out of one entirely, but I'm actually looking for an opportunity to just repurchase. Okay. I don't see any massive negative thing here. And I don't know how the Middle East plays a role into these commodities. It's primarily an oil driver. Grains and the others over the years kind of stopped watching oils much, but they may get back, get excited on that. I can't guarantee that, I think there's a little bit of it lately. I think the last couple of days, the reason they knocked grains down is the grains are a little more sensitive to the dollar than what they've been through for several years, but it comes and goes. It's rather fickle. The dollar shooting up might have concerned some, but I think you hit it on the head. It's really more harvest pressure than anything.
Right.
Okay.
Yeah.
But you've got all these other little subtle things working for and against, but I'm coming up with a balance that we are evolving towards a net positive outlook for these grain prices.
Okay. Last question, I'll let you go. And this is a bigger philosophical question, so you got 2 minutes to answer it. So it's it's one of those deals where I've been thinking about the U.S. from energy independence, right? So if you're looking at natural gas, you're looking at oil, we could altogether just stop saying, hey, you know what? We don't need any oil imports at all ever again. What's that do to the world, to the overall world marketplace? How does West Texas oil index compared to the Brent oil index? How does that change, right? Because typically Brent's $5 to $10 higher than West Texas, So if all of a sudden the United States is we're going to export before we import, and we don't need anybody else's oil, what's that do to in your opinion? What's that do to the world oil marketplace?
Normally, I would expect that spread to narrow with Brent over U.S. WTI. So it wouldn't be as high when it's going up. It might go a little lower when the whole market's going down. A little bit different relationship there, a softer relationship to the U.S. However, we've kind of known about this big supply of U.S. oil, this big production for a few years now. We've been working at it, building at it. And yes, it's the best ever, but the point is it really come on strong here in just recent years. And you could argue Brent still is held up there pretty good. It's like the Brent saying, I will, keep it up there. I think to me, it should just make the world a little more at ease that the U.S. is also setting on a high supply. It could make it easier to put the pressure on OPEC to boost production up there if there's some issues, such as blowing up Iran. Okay.
Mm-hmm.
And that could also temper how high Brent would run as well. All right. I could see Brent maybe even running up a little faster compared if we kept our own cool, kept our minds from getting too crazy here, that kind of thing.
You're talking crazy now, Rich. That's what you're doing now.
Yeah,
you're talking crazy right there, buddy.
So, but that's an interesting question for some of the spread traders between Brent and WTI. But to me, I think this, the big story is the production from U.S., but when I put it into the global scene, it's still the biggest component, I think, of latest, freshest news. But to me, all it really does is say there's actually more global oil too.
Right.
And Saudi Arabia, they're smart enough to know they can't raise price up too much and they get into a problem. They're more concerned speculators drive it lower in what they want to make money for themselves. And that's why they try to threaten at times, put the brakes on. But they've kind of, they've softened in the past couple of years here. They're a little more realistic of what's going on, that they can't I think they know they can't get $100 in oil a barrel. It's going to cause some problems.
Yeah.
But at the same time, they know they don't want less than 65.
Right.
I'm very convinced.
Right. Yeah. Well, that's what we talked about earlier. Now it's like that $15 range. It kind of fluctuates between 67. You see it to get about $66, $67, and then it runs up to about 72, 73, and it kind of stays there for a while, and it bounces around.
Yeah.
Kind of bangs up to maybe 80, and it gets to about 85, and then it comes back down to like the low 70s, it seems like. It's just like it wants to stay. I don't know if that it wants to stay there, but that's where everybody wants it to stay, is somewhere in that mid to high 70 range.
It's kind of good equilibrium in the sense that they might not be happy with it at times, but at the same time, it doesn't rock the boat with anybody.
Right. Yeah.
They're getting along with it.
Yeah.
Yeah. And good thing. It's just a matter of, you can just see the only way you're going to drive it up is you need that shock supply disruption.
Right.
And yes, we may get it with this Iran and Israel thing. And right today, I don't know how to really predict that, other than I know about the time when the stock market's going down. So I remind myself that may be a driver, and it may make it worse than I think. What am I going to do about that? And so that's what I present to my subscribers.
Right on. Okay. Rich, good stuff, man. That was, I saw that report come out this morning about the same time you text me, and I was just listening to the talking heads talk about all the 0% chance for a 0.5% cut. And, there's like a 93% chance for a 0.25%.
Yeah.
So I don't know if Vegas taking the odds on that or what, but that, if you had any money in there that there's going to be a 0.5%, you pretty much lost it all. So it's gone. It's gone.
Yeah.
Right on. Well, Rich, tell people about your podcast and where they can find it.
Go to criticalpoint.podbean.com, BEAN. That's the simplest place to find it. I have a site at criticalpointpod.com. That's really just about me, but you can find the pages that go over to the other one, and you'll see videos, autos. And you can also just go to Apple Podcasts and do a search for Critical Point.
Yep.
And you'll find the free ones. You'll find the ones locked up. And you really want to get on board. You try this for about 3 months, you're going to be with me for several years, because we got a very exciting and profitable journey here for the rest of this decade. But there's going to be lots of scary moments along the way. And the way I've designed this stuff after dealing with the market, I've been in this for 40 years now. I can tell you it really does a fine job of saying maybe we don't know the exact story, but a bad news story is coming within a few hours, things like that. It will point it out. It makes it fun. Even if I should say it's not that important, it still makes it fun to say, okay, we're not going to do anything about it because we don't want to screw up our long-term goals here making money. But at least we know our accounts are going to fluctuate against us, and then you see it happen. And sometimes you say, well, should have done something. We could have made an extra buck. But what it really does is teach you the discipline to say, if it's working that well day to day, when we get to that more important sell signal, and I have a variety of them. I can sell anywhere from 4 to 6 times a year, 2 to 3 times a year. I give you ideas how to sell once a month if you want, and buy signals to go right along with it. I can kind of tell you whether it's an up day, down day. I do a pretty good job at that. And but I have signals during the decade, a few times during the decade, and I have a once a decade buy signal that when I say buy, you better start thinking market's going up 100 to 400% or more. And we did that in 2020, 2 days after the bottom. And I still own some of those stocks from them. And I'm up a lot, and it's just working good. So therefore, you want to be prepared for that sell signal, because even though it can go up 400% a decade, it's been known to go down minus 20 to minus 50% a decade, and sometimes even more when there's some super cycle problems. So I got some pretty valuable information from now to the end of the decade. It's pretty pleased at the moment here today. But yes, I also admit I have days and okay, things didn't work quite the way I wanted. I'm a realist, so and I study my own performance to stay on top of it. But on balance, this whole business cycle stuff, the way I put it together over decades, it took me decades to learn it all, and it kind of learns on its own of how to keep up with the modern economy and the latest people who are pushing those buttons out there, buying and selling billions and shoving this market around. So
right on. Okay. Well worth the time to go check it out. Go check out the free stuff first over there on Rich's side. And once you listen to it, you're going to want to subscribe. So it's well worth your time to do that. Rich has got they're not long. They're 5 to 7 minute long little hitters. You come out with one about every morning or every afternoon. Rich, what is it?
It's a morning brief, I call it,
Yeah.
and then I might give alerts at any time, day or night. And those alerts are normally for the larger moves during a year. I don't really do it off the monthly sell signals and buy signals. They're more or less pointed out, so you know about when to do it, and you can make your own decision. And then I do a weekly update. And we have a weekly update of, say, just bonds and interest or gold and Bitcoin. We have a weekly update just of the grains. We have a weekly update of just the stock market and economy and interest rates. And they come out every Thursday unless there's an issue, and we'll delay it a little bit. But we stick pretty good with the schedule. And the beauty of this is, some people say, well, there's nothing that great going on. I'm making money. It's working. I don't need to watch it every day. I fully agree. But the morning briefs are there if you need an update, or if you're a very active short-term type of trader, you'll want them. But you can get by with the weekly updates. And the beauty of that is at the beginning of the update, I give you a quick snapshot. Then I go through all the analysis, and sometimes I can get a little long-winded trying to talk everything. And so I have people that say, I listen first piece in case I got to do something, and then I can listen to it over the weekend when I have more time. One guy tells me, Friday afternoon, I'm jogging, I'm listening to your entire weekly update every time. But he also tells me when it first comes out, he normally grabs that first few minutes, make sure the world isn't falling apart. And then he goes on. So,
right on. Well, Rich, appreciate you being on the podcast, man. I hope to get you back on here in the coming month. And if not, if something crazy happens here, we'll get you back on. But looking forward to seeing you in Nashville. So we'll talk to you then, man.
Great. Thank you.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast, and check out the video version over on the YouTube channel, which is cleverly named the Moving Iron Podcast YouTube channel. Check that out. You can also go to movingironllc.com for everything Moving Iron related. So with that, I'm Casey Seymour with Rich Posson. Let's go move some iron. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately? Target the right buyers and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century.